Folks, you better get ready. In today's video, we're going to break down the latest on the market and plays. And then we're going to go into one specific stock trading at just over $6 that I believe has extreme upside potential. I believe this might actually end up being the next crazy AI runner, and it's going to be one that you're going to want to know if you're in the markets for the next few quarters. The stock has a very similar business strategy to Palantir. It has a huge proof of concept. It has huge upcoming catalysts. It has a super small market cap, and its price is down significantly from all-time highs. I'm going to make the case for it, explain the business, upcoming catalysts, strategies, and we'll also go into the risk as well. And then I'll leave you to be the judge. As always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Okay, so for starters, I just want to take a moment to say Happy Veterans Day and to appreciate all of our veterans. I also know that we have a lot of both active and retired military folks that watch this channel, and I do want to make sure that you understand that you're very much appreciated. Okay, let's get to work. So market context. Now, in the last video, I gave a long, in-depth breakdown of why I believe the next 45 days to the new year is a critical time to position yourself appropriately for 2026, and you really need to internalize this because what's going to happen is a big stinking deal. Now, there is no shortage of media ping-ponging back and forth between fear and greed on what seems to be now a daily basis. But folks, this is all just noise. When you shut out the noise and you focus on the bigger picture, 2026 is going to be an extreme opportunity for growth. And what does that mean? It means preparing now. Why is 2026 such a big opportunity? For starters, AI CapEx commitments in the trillions of dollars, company earnings continuing to skyrocket, rate cuts incoming, an even more dovish Fed chair replacement coming in May, a midterm cycle liquidity boost, the many trillions of dollars in sideline cash, money printing, pumping assets. 2026 is going to grow many people that are prepared, and it's going to absolutely destroy folks that weren't prepared and couldn't think for themselves. If you're somebody who is new to markets, you need to know that 2025 has been an unusually consistent year. Besides the massive dump in April with the tariff crash, we've gone basically straight up with very rare setbacks in the overall trend, and that's what I would call a sweetheart market. Yes, I know the media and the experts fear-mongered all year, and back in April, anyone who bought the dip was considered a foolish clown, but nonetheless, as far as bull markets go, this was a sweetheart market. Now, 2026 is setting up to be an even more extreme opportunity than 2025. However, it's also going to be way more dangerous. I'm going to make a bold prediction here, and I'm going to explain it in a second, but my prediction for 2026 is that overall, you're going to see a massive uptrend, but you're going to also see more frequent and severe dumps. I think 2026, you're going to see multiple 10 to 20% drawdowns, perhaps a major 30% plus drawdown if we don't get that regular breathing. Why am I making this prediction? What's it based on? It's based on one thing: margin. Margin usage is going to dramatically expand in 2026, and that's going to have far-reaching consequences. Right now, margin usage is already at all-time highs. The margin situation for 2026 is as follows. Margin leveraging will surge with lower rates. Margin debt is already high, but with lower and lower rates, margin usage will go through the roof. Margin will become cheaper and cheaper again in 2026, and the lower the rate, the more obvious a deal it is to take out margin and buy stocks. If the S&P 500 returns 10% on average and rates are well below 10%, while many market participants and fund managers make the call that it makes a ton of sense to use margin to buy more and more into the market. Many managers are already doing this because tech stocks have been returning 3 to 4x the average of the S&P 500. So they're thinking, okay, well, if we take out a lot of margin at 10%, at 8%, at 12%, and we're buying into Nvidia, which goes up 40%, well, that's a good deal. But imagine what's going to happen as these rates get cut more and more and get cut to half of what it's at now, and probably even lower if you're looking out multi-years. So why does this margin situation mean that markets are going to become more volatile? Well, you have to understand that margin is a double-edged sword. People utilizing a lot of margin can make many multiples of their money for every 1% upswing in the stock market. And so what happens? Well, you end up having a lot of these players go and they take out massive amounts of margin to further ride stocks that are already going up fast, which causes those stocks to go up even faster. And it causes them to make money even faster, which is great, and you get a huge melt up. But then what happens? Well, you're multiplying your gains to the upside, but you've also multiplied your losses when things are going down. And just like every percent increase is multiplied with margin, well, every percent decrease is multiplied with margin too. And unlike on the upside, well, on the downside, you could get margin cult, which causes these situations where you have these massive runs and then all of a sudden, boom, a crash. Now, overall, again, I think the entire year is backstop, so dip buyers are going to be nowhere in short supply. However, for folks that really just want to buy stocks and then just ride it slow slowly over time and then not have any volatility, this is not going to be the year for you. For folks that really want to grow their account and are comfortable with volatility, this is going to be a fantastic time, probably one of the best ever. You're going to see 2026 is going to be incredibly volatile, way more volatile than 2025 was. You're not going to see a consistent straight up line. You're going to see aggressive dips. You're going to see aggressive tests. You're going to see people fear-mongering about valuations at every new high. You're going to see Trump tweets cause mega crashes and corrections over and over again. Not just one, not just two, but many different ones. Because people are going to become way more sensitive in this new margin environment. People are going to become way more sensitive because valuations are going to be climbing. People are going to become way more sensitive because every dip is going to completely blow up some of the folks that were too aggressive into margin. So anyways, how do you protect yourself in this coming environment? Well, for starters, buy great assets at solid prices over time slowly. Don't change your opinion because of stock price fluctuations. Focus on the business versus stock price arbitrage. Most people look at a stock as an indication for how a business is doing, whereas you should actually be flipping that. You should be looking at the business as an indication for where the stock price is at. And if there's a mispricing, well, that's an arbitrage opportunity. Thirdly, you got to use volatility to your advantage. If a great asset gets oversold, buy it. If a great asset gets overbought, sell or trim it. And lastly, if you see rapid growth or rapid destruction over a short-term time span, don't feel too good or bad about yourself because long-term real value shines through. You can get lucky or unlucky over a short time frame, but if you're buying good assets at good prices over time and you stay with your convictions and you adjust your convictions for the times that you're wrong, well, long-term, those good practices will shine through. And finally, one big warning for 2026. Do not trade with money that you can't afford to lose. And that also means don't trade with money that is so much of your bigger picture that you won't be able to stomach inevitable swings. Because again, the people that do these two things are going to be absolutely destroyed next year because quite frankly, it's going to be a way more volatile year. Okay, next, I want to give you an update on a key play, AMD. So let's talk AMD Advanced Money Dispenser, Advanced Micro Devices. So CEO Lisa Su says AI business is going to grow more than 60% a year for 3 to 5 years. And a lot of folks are now screaming about this stock, but for context here, I've been yelling hard all year about AMD and really for years about AMD and the lopsided upside potential that it has, but I know it's long been an underdog. A second to Nvidia, people thought, why would I buy AMD if I could just buy Nvidia? And we've also been big fans of Nvidia, but a lot of folks just simply completely overlook anything that's an underdog. They only buy once everybody else has bought and everybody else believes in it, and at that point, a lot of the upside has already been erased. And I think this is a very important lesson now because AMD still is an underdog. But anyways, if you go back to my December 18th, 2024 video, I explained that AMD is going to really outperform in 2025 because of their hard pivot into the GPU market, the AI market, and as well as the strength in other core segments. And I explained that this is going to be an obvious winner. The argument I've always had is there's so much overflow of demand and there's a massive chip shortage, and AMD would be set to benefit substantially from this, especially considering the low market cap and the low comps compared to its competitors. But at the time, a lot of folks were looking at the stock and AMD was actually down 12.39% year to date at that point in December for 2024. So people look at that and they say, why the hell would I buy a stock that is down 12.39% year to date when Nvidia was up some 132% year to date at that time? We made the argument that, look, Nvidia is great, but AMD is very undervalued and there's a lot of catch-up potential here, and we believed it was going to outperform. And how did the two perform? Well, if you look at it, AMD is up 99% year to date, a little bit more than 100% in the after hours if you include that run, and Nvidia is up 40% year to date. Both excellent buys, but for many of the folks that said that AMD was a scam stock, that because it was down, it was going to be very bad and an underperformer, well, it actually outperformed Nvidia by more than 2x. Again, they were both great buys. We've been big fans of both for many years. But this is a great lesson because a lot of people missed out on AMD early on because of what you could call recency bias. People love to believe that how a stock has performed recently is an indication of how that stock must continue to perform. This mindset causes people to completely ignore what an underlying company is doing. They just look at how markets have seen the company. But that's actually a really bad way to get ahead of the market in terms of deals. So when you're looking at AMD and you're looking at what we called out right on AMD over the last year plus, it's the fact that markets had really slept on it. The fact that markets had refused to value the massive overflowing of demand. And I think that we're still in the early innings of that for AMD. So anyways, going back to my point earlier, whenever you're trying to buy something, please consider what the business is doing first. And then ask yourself, what is a fair price to pay in terms of the stock price? And is there an arbitrage opportunity there? Part of that also means looking at the comps of the competitors, because in certain market environments, people will pay a bigger multiple on sales. People pay a bigger multiple for a certain type of company. Right now, that's AI and specifically chip makers, right? When I looked at all those things back in April, when I looked at that a year ago for AMD and even before that, well, I looked at it and I said, you know what? This is ridiculous. These prices are crazy. Sure, it's underperforming now. Sure, it's slow right now. But if you look out at what this is going to be doing in 6 to 12 months plus, oof. And now you can see it's outperformed. This is yet another example of a stock that maybe people didn't like that I talked about it, and maybe it didn't return immediately. But if you extended out your time horizon, I mean, it did more than 2x on NVIDIA. So anyways, when you're analyzing your own stocks, this is something to consider. Just because something's an underdog, just because something underperformed recently or even over a while, doesn't mean that it's going to continue to underperform. In fact, some of the biggest outperformers are the ones that are completely destroyed by markets and considered absolute scam stocks for quite some time. If everybody knew that it was going to go up, it already would be up. Okay, anyways, now it's time to go on to the main entree, and that is BBAI. BigBear.ai. So BigBear.ai is a small but very quickly up-and-coming player in the decision intelligence mission-critical AI space. Its mission is to deliver what they say is clarity for the world's most complex decisions via AI-powered platforms and analytics. And unlike many generic enterprise software plays chasing broad markets, BigBear leans into high-barrier mission-critical use cases: defense, logistics, joint force readiness, border security, biometrics at travel hubs. That gives it a niche posture and the potential for outsized upside if the tailwinds align, as they appear to be aligning. Backing up one of my most successful picks of all time, Palantir was chosen because it followed a very, very specific strategy. How Palantir built its empire: step 1, onboard your software for free, show the company how it works, show the team how to use it. Step 2, prove the tech works. Step 3, get a small contract for a department. Step 4, expand across the organization. Step 5, lock in multi-year 8 to 9 figure deals. Now, this is essentially more or less the strategy that BigBear.ai is doing right now, and it's executing this very, very successfully. So well, in fact, that Barron's ran an article saying it could be a mini Palantir. So what exactly is the value proposition of BBAI? For starters, BBAI is an increasingly big player in decision intelligence systems for the U.S. military, intelligence agencies, and major infrastructure operators. Its tech helps predict, plan, and act faster in real-world defense and logistics missions. Number 2, it's a defense-grade moat. There's very, very few players like this, but once BigBear.ai embeds into a government program, it's locked in for years due to security clearances, integration depth, and data sensitivity, creating a powerful high barrier moat that most AI startups can't compete with. Number 3, AI plus defense supercycle. The company sits right at the intersection of rising global defense budgets and the AI arms race. Governments are racing to modernize decision systems, logistics, and threat detection. BigBear.ai's sweet spot. And then you've got real-world validation. Its latest 3.5-year sole source Department of Defense contract validates its tech. These multi-year wins don't just boost credibility, they establish recurring, stable revenue streams once activated. And then you've got expanding partnerships, collaborations with DEF CON AI, and the acquisition of Ask Sage, a generative AI platform for defense, position BigBear to lead the next wave of AI-augmented command intelligence. And then you have an asymmetric setup, which is what we love to see. With a small market cap and exposure to massive, high-speed verticals, BBAI offers leverage to big defense AI momentum. It's one of those underdogs that could deliver explosive returns if execution aligns with macro tailwinds. Now, BBAI just reported earnings yesterday, and I was very, very impressed by said earnings, which is why I decided to make a video on it today. BigBear.ai shocked skeptics with a $2.5 million net profit, flipping from a $15.1 million loss from a year ago. That's not just cost control, it's operational leverage kicking in. A lot of people on Wall Street, short sellers included, were saying this is AI vaporware, but this company is showing now that it can generate cash flow and actually monetize its tech stack. Now, the backlog, most importantly, is surging. That means real revenue visibility. The firm ended the quarter with a $376 million backlog, up from $250 million earlier in the year. This is huge. It means BigBear.ai has booked demand that's nearly 3x its annual revenue guidance. Talk about growth. That kind of visibility is what moves a company from hope stock, hopium stock, to execution story. The backlog strength signals multi-year contract stability across DoD, logistics, and analytics platforms. Now, number 3, generative AI expansion, the Ask Sage acquisition. So BigBear's announced acquisition of Ask Sage, a secure generative AI assistant for regulated industries, is the kind of next leg catalyst that could fundamentally expand its TAM, its total addressable market. This move plugs BigBear directly into government-safe Gen AI, an underserved niche where commercial players like OpenAI and Anthropic just simply can't easily go. It's an intelligent play for sticky, high-margin software contracts. Number 4, solid execution despite macro headwinds. So even amid federal budget volatility and delays in contract timing, Big Bear reaffirmed its full-year revenue guidance of $125 to $140 million. That's confidence. It shows management believes the backlog will convert and the new AI products are going to continue gaining traction. Maintaining guidance while moving into profitability tells the street, look, we're controlling what we can control and it's working. Now, the market reaction, I think, confirms this. You're seeing a lot of people start reallocating into the stock after the earnings. And then number 6, strategic positioning. I think this is very beautiful positioning here. Big Bear's bread and butter AI-driven decision intelligence for defense, logistics, and infrastructure is exactly where the biggest AI contracts are going next. With Fusion, Argus, and soon Ask Sage, BBAI is targeting the AI operations layer where predictive analytics, automation, and real-time situational awareness converge. In my opinion, BBAI is trading like a very distressed asset while posting profitability. I think that this backlog growth, the new platform expansion, and some of their other bold moves that I think is going to really cause their revenue to increase over the coming years. Well, I think the current prices are basically distress level prices. And if we're being honest, the stock should already be trading somewhere around $20 to $25. But when you're looking out even further, I think you're looking at a lot more upside. Now, the context here is the first time we spoke publicly about the stock and our belief in it on the channel was back on March 3rd, 2024. And at that point in time, the stock had just cooled down from $418 a share to $365. And I said, look, this is going to be aging to be a great buy if you look at it over the long term. And if you had bought it then, it actually ended up going as high as $10.36 this past February before it cooled down again. And it dumped again during the tariff crash. And then after that, you saw a nice recovery back to $9.37, and then you saw another sell-off and we're all the way back down to $6.29. So what do you make of this trading? Well, look, you have to understand that small caps, especially of this variety, well, they're in what's called a price discovery phase. The smaller the stock, the more likely the stock's going to go into euphoria or dysphoria cycles just based on a press release or two, or based on an earnings release or two. And that's actually a pretty big opportunity because when people are completely abandoning conviction in a stock, that's how you get a better deal. And when you get the euphoria, that's when you can start trimming profits. But long-term, we do see a very beautiful picture for this stock. Okay, let's talk long-term price target now. Of course, quick plug, if you are a Discord member, you're going to get all of our price targets and you're going to get them all first. But this is what we sent out to Discord members today. Our BBAI forecast through 2030 is as follows. In the commercial AI platform, I see about $680 million of revenue in my bull case. For the government and defense AI systems, I see about $410 million. And this is going to scale up to create a combined total revenue of $1.09 billion at a multiple that I would think is appropriate based on much higher comps today. I would say you're looking at something around $27.3 billion in market cap, and that comes out to a price per share of $55. Now, a few little details that are important to note in this situation with the implied stock price. What I did is I went and I dramatically increased the share count. What does that mean? Well, it means that I essentially factored in a significant level of dilution, going from the current 436 million shares to 500 million shares by 2030. That's a lot of dilution, and you're still getting somewhere around $55 per share. Now, in my bear case, and you have to be prepared for any kind of bear case situation, but I think even if they're managing themselves just moderately bad, I think that you're looking at a $13 share price, which is still more than a double from current pricing. What about call option ideas? Well, back on June 29th, we alerted $8 strike calls expiring January 16th, 2026, and that's just around the corner now. And we've absolutely obliterated through the $8 resistance level multiple times since then, but I'm planning to alert the next round of BBAI calls after posting this video. They'll have a farther out expiration date and a higher strike price because I do believe BBAI will hit much higher highs in the next few months and build onto that in 2026. And if you'd like to see those, I'm going to post that in the Discord right after I post this video. And if you aren't a member yet, of course, that first link is down below. Anyways, folks, I hope you found value in this video. Happy Veterans Day. Let us know what your favorite stocks are down below and your favorite setups heading into 2026. And we will see you in the next video.